All right, so the Fair Labor Standards Act, the FLSA, you'll hear me use both terms. So this is our first acronym to become familiar with. FLSA. This was passed in 1938. So what was going on in 1938? Historically, in the U.S. and in the world, what was happening in 1938? What's that? The Great Depression. Exactly. So we were at least starting to get to the tail end of the Great Depression. Really, it was the war kind of got us finally out of it. But during that time, we had like 25% unemployment in the United States, other countries as well. This was a worldwide phenomenon. And so a lot of different social programs were implemented during this time to try and combat the Great Depression and to prevent anything like this from happening again, because there were no social safety nets. If you were unemployed, you were unemployed. There was no unemployment insurance that would help to pay for, help you to get by until you found a job. There was no welfare at that point. So there was nothing to ensure that people didn't fall into poverty. The FLSA was one of those laws that was enacted during this whole time, just like Social Security, and the Social Security system was also passed about the same time to help make sure that individuals did not fall into poverty when they were hit upon hard times. So one of the things that the FLSA did was it imposed a minimum wage for the first time. Now, right now, the minimum wage is $7.25 an hour. It didn't start out like that in 1938, obviously. But it is currently at $7.25 an hour. It's been at that rate since, I think, 1996 or 1998. So it's been a long time since it has been increased. It takes an act of Congress in order to change that minimum wage. And we all know how efficient Congress is at making decisions. So, it has stayed at $7.25 an hour for many years. Now, the good news is I don't think at this point in time, there aren't very many people that are making that $7.25 an hour. Economic conditions have created a higher per hour demand than just the $7.25. But by law, at the federal level, it is still at $7.25 an hour for the minimum wage. It also mandates overtime under certain circumstances, and we'll talk in detail about what those circumstances when we get to chapter 2. But that means that individuals get paid a premium amount when they work over a certain number of hours a week. The standard is 40 hours a week. So you would get regular pay up to 40 hours a week, and then if you work more than 40 hours a week, you're going to get a premium on top of that. Right now, that federal requirement is 1.5 times your regular rate of pay. So if you're making $10 an hour, for the first 40 hours, you get $10 an hour for those 40 hours. After the 40 hours, you get $15 an hour, 1.5 times 10 for that overtime. So this is the law that mandates these special provisions. Also, it has within it some equal pay for equal work provisions so that individuals of similar skill and background doing the same job have to be paid the same amount. So ensuring that men or women aren't paid at a different amount simply because they're different genders or things like that. So that's what that equal pay for equal work. Now, it only applies, this is where a lot of students are surprised. These laws only apply to employers that are involved in interstate commerce or in the production of goods and services for interstate commerce. What does that mean? So interstate commerce is any type of commerce, business, where business is done across state lines. Now, it's really difficult to not do business across state lines these days because something as simple as picking up the phone and calling someone in Illinois from Iowa, if it's for business purposes, you're engaged in interstate commerce. Sending an email to somebody who's in a different state. Now you're engaged in interstate commerce. The reason that it has this provision is because the federal government does not have the ability to enforce these laws unless it's something that goes between the states, some type of business that goes between the states. Now, the good news is a lot of states, like I said, have their own rules regarding this as well. But these laws are for employers that are involved in interstate commerce, or they produce goods or services for interstate commerce. Okay, and again, we're going to go into more detail on that. We already talked about minimum wage. So this is Chapter 2. We're going to go into a lot of detail about the FLSA. Federal Insurance Contributions Act. This is Social Security and Medicare tax. This is one of our tax laws. Again, this was passed in the 30s for the same reasons as the FLSA. We wanted to combat the effects of the Great Depression and make sure that individuals did not fall into poverty. The Federal Insurance Contributions Act, Social Security helps to cover individuals for disability, so if an individual becomes disabled. Also, retirement benefits. Individuals, once they reach a certain retirement age, if they have met the criteria, can receive Social Security benefits. It also provides survivors benefits for individuals, for children of dependents who would have been entitled to receive Social Security benefits. From our perspective, we're not concerned about the benefits. We're concerned about the taxes, collecting the taxes that then pay for the benefits. So that's what our focus is here. Medicare provides health insurance for the elderly, for those who are retired, so usually for folks who are on Social Security. It also provides some insurance, can provide some insurance for those who are disabled as well. Different from Medicaid. Medicaid is a separate program. So we're talking about Medicare here, which provides health insurance for retirees for the most part. This is a tax paid by the employee. It's also paid by the employer. So we'll get into what that calculation is. A lot of students are surprised at that too when they haven't been in the employer's shoes before. They're just the employee. They're surprised to learn that their employer also has to pay this tax. And it also applies not just to employees, but to self-employed individuals. And we'll go through that. This is Chapter 3. Okay, so these first 3 chapters will comprise our midterm. Just if you're keeping track there. Income tax withholding laws. So we have federal income tax and state income tax. This is going to be Chapter 4. Income tax is, and we're talking about the withholding of income tax here. So the amount that is withheld from employee paychecks, both at the federal and the state level. And like I said, we're going to focus on Iowa when we talk about the state, since that's what pertains to most of us. So we'll get into those details when we get into Chapter 4. Unemployment taxes. There are 2 different types of unemployment taxes. Let's see. Yeah. So we have a federal unemployment tax, and again, this is paid only by the employer, the federal unemployment tax. So we'll go through that law. This is Chapter 5. I don't want to go through, they give you a lot more detail on this slide than we really need at this point, but the federal unemployment tax is combined with a state unemployment tax. So states also assess unemployment tax on employers. Now, there are some states, a couple states, that do have an unemployment tax that they assess on employees. So if you happen to work in one of those states, or you work for an organization that prepares payroll for employees in one of those states, you would have to know about and be familiar with that state's unemployment laws, and if the employee also has to contribute to those unemployment taxes. Okay. Again, so we're gonna the taxes that are collected from these are used to pay benefits to unemployed individuals. So, and we'll get more into this, a lot more detail in Chapter 5 of our textbook. Like I said, Chapter 6, what we're going to do, we don't talk really about the different laws or different tax calculations in Chapter 6. In Chapter 6, we're going to take all the information that we have gained in calculating those paychecks and calculating how much overall the employees, all of our employees have been paid, and how we integrate that information then into the accounting system. Okay, so all those debits and credits that we're going to need to prepare in order to get that information accurately into the system. All right, some of the laws. So these are the fair employment laws. So the first one, the Civil Rights Act of 1964. I'm going to put this up. Obviously pretty easy to figure out what year that was passed. Also known as the Equal Employment Opportunity Act. This one prohibits discrimination in hiring, firing, promoting, or compensating, so payment, based on color, race, religion, national origin, or gender. This is the federal law that prohibits discrimination based on those personal attributes. There are state laws that are more specific about the different attributes. They may have different, I know some of them will have like sexual orientation included. The federal law does not have that, however. So in all of these aspects, hiring, not just hiring, firing, so you can't fire somebody specifically because of one of these attributes. You can't promote somebody simply because they have one of these attributes, and you cannot pay them, compensate them based on one of these attributes. You can't determine what their pay is going to be based on one of these personal attributes. This is the 1964 Civil Rights Act. Also applies to unions. So not just the employer, but also unions. Can't discriminate based on those. Also prohibits sexual harassment. It applies to all employers who engage in an industry affecting commerce. So there's that interstate commerce. And they employ 15 or more workers in each of 20 or more weeks in the current or preceding calendar year. So you can see it actually doesn't apply to every employer. It applies to employers that meet those criteria. Now, the 1964 Civil Rights Act, it said all those things, but it didn't have any punishment for employers who violated them. So the Civil Rights Act of 1991 came into effect, which provided punitive damages when that discrimination was intentional. So it provided some meat to the actual enforcement of those laws, or of that law. Age Discrimination Act. In Employment Act. All right. So this one doesn't really have an acronym, but this one, DEA, Age Discrimination and Employment Act, prohibits, and this was 1967, that employers, employment agencies, labor unions cannot use age to discriminate in hiring, firing, or promoting. Again, only for those employers who are engaged in interstate commerce and that have 20 or more workers. So it means you can't fire somebody based on their age, solely based on their age. There are some exceptions to this. So and it's not necessarily firing, but also forced retirement. So pilots, there are certain industries where age can become a factor. I think pilots nowadays, I believe it's 65. They can mandate that you retire. Certain public safety professions. Anybody have any idea what you think the age cutoff is? Like after what point that you can't, like if somebody is some age, after that point you can't, they're protected from discrimination? What do you think it makes sense for that age to be? 61, okay. 65, okay. 64, okay, so we got the 60s here. It's actually a lot younger than you'd think. It's 40. So it provides protections to workers that are over 40 years old, because I guess that's where they've determined that age discrimination starts to take place. There are some exceptions to it. Executives 65 or older, if they have held high policy-making positions during the 2-year period and are entitled to an annual retirement benefit of at least $44,000, I guess they can fire them or forcibly retire those individuals. And like I said, there's certain public safety occupations as well where there may be an exception to that. But that's the ADEA. The ADA, Americans with Disabilities Act. So this one prohibits disability-based discrimination, and it applies to a job application procedure, hiring, advancement, termination, compensation, job training, and other conditions of employment. So not just hiring, the whole life cycle of the employee, these anti-discrimination laws cover. And there are limits on it. The individual is defined as someone who can perform the essential functions of the job with or without reasonable accommodation. So, and it covers a lot of different areas. It would not cover, so like if you are visually impaired, you are not going to be able to be a truck driver. Right? So that would be someone who is really unable to perform the functions even with accommodations. So that would be an example of an exception. But for individuals who are able to perform the functions, even if there are some reasonable accommodations, they cannot be discriminated against. So examples of reasonable accommodations: wheelchair accessible restrooms, ramps as well. A lot of the ADA even covers like nursing areas for mothers who have given birth. I think that falls under the ADA, the umbrella of the Americans with Disabilities Act. This act has an Iowa connection. It was actually co-authored by an Iowa Senator, Tom Harkin, back in the 80s. He was one of the co-authors of this particular act. This is the one that's the big federal personal responsibility. I'm not going to write it all out. Federal Personal Responsibility and Work Opportunity Reconciliation Act of 1996, FPRWORA. So this means this particular act mandated, so this was 1996, this mandated employers to notify the state anytime a new individual was hired. So they have to send a new hire form into the state in which they're in within 20 days of a new hire. The purpose of this is to collect child support. So individuals so the state is aware of where every individual is working in case they are required to provide child support payments. So what they have to provide: name, address, social security number. A lot of states, including Iowa, what they'll do is they'll just submit a copy of the W-4 form that's filled out. The records are coordinated through the Federal Office of Child Support Enforcement. Fines aren't real steep, $25 per new hire if you fail to report, but and there are some states that also require this for independent contractors, not just for employees. And like I said, it's used to enforce those child support obligations. So the state knows when somebody has been hired, so that if they have a garnishment, a child support garnishment, they know where to send that garnishment to that employer. Immigration Reform and Control Act. Anybody know what an I-9 form is? Yes. What's an I-9 form? Sorry, I put you on the spot. Who said yes? Okay.
Yeah, I'm not sure 100% about that, but the immigration they come to the United States, they will give to the refugees or something like that, like the paper.
Okay, so with regard to employers, what the I-9 form is a form that is filled out by the employee, and they have to provide proof that they are eligible to work in the United States. And they may have received that for those who are not citizens, they may have received that when they came into the country. For those who are citizens, it would be their birth certificate. Or a passport, yeah, or a naturalization paperwork. So the Immigration Reform and Control Act mandates that employers have to verify that individuals are eligible to work in the United States. So, and those individuals have to provide two forms. Well, they have to provide identification that does two things. It verifies who they are, and it verifies their eligibility to work. So who they are, a driver's license would verify who they are, but a driver's license doesn't verify that they're eligible to work. So a social security card that does not have a restriction on it, that would be something that would verify that they are eligible to work. So this is the act, and it was passed in 1986. Employers have to collect this information on employees. There are a lot of employers that get in trouble over this because they don't do it, and they run the risk of having the federal government come in and audit all of their records to ensure that they are in compliance. Has to be signed and accepted by the employer within 3 days of the start date of the employee. So again, ICE, U.S. Citizenship Immigration Services can come in and audit and level penalties for the violations. That would be against then the employer. There is this E-Verify system, which the government does have a database so that employers can verify Social Security numbers against that database. And it helps if employers use that. It helps to give them kind of a CYA, so they can cover themselves in case if they use that system and they rely on that system for verification, then they can use that to defend themselves if there was any question about that. So the IRCA. Again, that's the I-9 form. Family Medical Leave Act. So Family Medical Leave Act passed in 1993. Again, employers with 50 or more employees within a 75-mile radius for at least 20 weeks during the current or preceding calendar year, so it doesn't apply to every employer. 50 employees is a lot, right? So employees are guaranteed 12 weeks of unpaid leave for certain events. So childbirth, adoption, serious illness of the employee or the employee's child, spouse, or parent. So there's no guarantee that they get paid for that time. Some states have leave, medical leave that is paid. The federal government does not mandate that, though. So for the federal government, at the federal side, guaranteed that you will not lose your job during that period. Now, you don't have to, they don't have to offer you the same job back, but they have to offer you the same pay when you come back. It can be used all at once or at separate times within a 12-month qualifying event. And different. So the employer has to continue health care coverage for the employee, but they can charge the employee for that health care coverage. I'm writing these down because I'm going to have you do this little, I'm going to have you work on something before Thursday's class. US, is it ERRA? So the US ERRA requires employers to allow leaves of absence for uniformed those in the armed services if they are deployed on leave, and they have to be reinstated then to the original position or the equivalent when they get back. ERISA, Employee Retirement Income Security Act. So this one there's no requirement that employers have pensions or retirement plans, but if they do have a pension or retirement plan, they have to follow ERISA, and it has to do with vesting of service. So, and vesting means that an employee is entitled to amounts that the employer contributes to their retirement plan. So if an employee is 100% vested, it means that even if they leave employment, they get to take everything with them that has been put in by the employer toward their retirement. If they're 50% vested, it means that they get 50% of what the employer has put in on their behalf. They always are entitled to whatever they've put in themselves, but this is the amount that the employer has put in. And then there are record-keeping requirements as well. So it tells you there's a 3 to 7 year vesting, 20% after 3 years, 20% increase until 100%, which is reached after 7 years. So that tells you how much the employee is entitled to, and some different specific requirements of ERISA. And then the last one, the ACA, which is the Affordable Care Act, which was passed in 2010. This mandated that it's been watered down a lot over the years. At first, it mandated that everybody have health insurance. There's no requirement anymore that everybody have health insurance. But there is, for employers that provide health insurance, it provides regulations for what they have to cover in that health insurance. So, and it was designed to increase health insurance coverage. So these are some of the specifics. Has to do, what you are required to do depends on how big a employer you are. So the larger the employer you are, 50 plus more employees, then you've got certain requirements as an applicable large employer. Small employers, they have the opportunity to purchase health insurance for their employees on certain exchanges. And then how much the employer has to contribute toward that health insurance. All right. I wrote these up here because what I want you to do, and I was going to do this in class, but we've run out of time. So I want you to choose one of these laws. Let me get this up here. It's under the instructions for it are under the daily agenda. So we won't do it in a small group, so we'll just do it individually. I want you to research one of those laws. I just gave you a really brief overview of them, right? I want you to go a little bit more in depth on what they are. That's a good idea. I'll take a picture of it too, and I'll post it. Although they're all listed here. I don't have to do that. They're all listed here. Same ones as I don't think there's any that I missed. Choose one of these here. Find at least 3 facts about it. 3 facts that aren't on the slides, okay? something a little bit more about it, maybe a little bit about the history, how it came to be, that sort of thing. And then at the beginning of Thursday, we're going to share what you found out about that law. Okay? Make sense? Sorry, once again, I underestimated the amount of time that this was going to take.